This is King World News. I'm Eric King, and you are about to hear our exclusive weekly gold brief with GATA, this week with Adrian Douglas. Remember to go to our homepage at www.kingworldnews.com for more interviews, where this week we will also have Peter Barnes, CEO of Silver Wheaton, as well as Gerald Salente of the Trends Research Institute. Gold closed the week near the $950 level, silver at $14.71, and the HUI Gold Bugs Index closed at 357. Joining us now is Adrian Douglas, founder of Market Force Analysis and board member of GATA. Adrian, I talked with Chris Powell about this last week, but I'm just curious on your comments about the fact that the word is that the European Central Bank has essentially stopped selling gold. Can you comment on that?
Yes, we've seen their weekly selling dry up to a trickle, and they recently made the new Washington Agreement extension for another 5-year period, making the limit 400 tons instead of the previous 500 tons. Now, with their weekly selling almost zero, the 400-ton limit per year is somewhat of a joke. But I think the only reason that they set at that limit is to frighten would-be gold investors that the IMF gold, which is about 400 tons that's expected to be approved for sale, could be sold in a single year, or of course even in a single day. And I think that's why there is a 400-ton limit on it. But essentially the ECB central banks look like they're out of the gold market.
Max Kaiser revealed recently that Germany's gold is in U.S. custody, and that sort of helped confirm what GATA was talking about, I guess, going back to 2001. And there's been rumors that Germany wants its gold returned. Can you elaborate on that a little bit?
Yes, one of the things that James Turk of GATA discovered was that the mint at West Point had been reporting their gold as reserve gold. And then when there was a change of the mint manager, the report termed that gold as custodial gold, which would imply that it was no longer belonging to the U.S. It was belonging to someone else and was just in their custody. GATA asked some questions which were not answered, but short time after, they changed the classification again to deep storage gold, which we joked at the time meant that the gold hadn't actually been mined. But what we believe happened, and we know there was a swap arranged with the ESF, the Exchange Stabilization Fund, and the Bundesbank. We believe there was 1,700 tons of gold swapped with the Germans, and they sold it into the market to control the gold price at that time. So that means that the 1,700 tons of gold at West Point now belongs to Germany. So it was quite interesting the other day that Max Kaiser confirmed this with an interview with someone in the Bundesbank, because it goes back to what we had been looking at several years ago. And we think with what's happening in the gold market that the physical market is seeing a lot of stress, which ties into the ECB not selling gold anymore, that the Germans want it back. They don't feel comfortable with it having it on U.S. soil.
Will hedge funds and investors follow Greenlight Capital and sell GLD shares and buy physical? Because what's happening with the GLD holdings are being reduced a little bit, but the gold price is still pretty firm. What are your thoughts on that, Adrian?
Yes, I think ETFs like GLD have been a sink for gold demand. I think that's why they were approved. The people that we accuse of manipulating the market, the large bullion banks, are involved in these ETFs as custodians of the metal. So we think that it was a way to channel a lot of would-be demand for physical into paper. And we suspect that they don't have the gold that they say they have. And it seems that some people are agreeing with our opinion, like Greenlight Capital, and they switched almost $500 million from GLD holdings into physical bullion. And I think, as they're such a big hedge fund, that the other hedge funds and the investors in general would be rather naive to ignore that very strong statement as to what they think is the equivalence of GLD shares and compared to physical bullion. They prefer to hold physical bullion. So I think that will be a growing trend. And I think it may also be something which is a factor in the market already, because we've seen the last few months gold price rally quite strongly at a time when the traditional physical buyers, the Indians and the Easterners, haven't been present in the market. And that's usually a time when the bullion banks get their way. They can smack down the gold price because the investors in the West typically are paper holders and dealing in futures and paper substitutes for gold. The fact that gold gold has rallied strongly in the absence of the typical physical buyers, I think there are a lot of institutions, perhaps like Greenlight, that are buying physical and not paper substitutes.
As you know, we're getting on the commitment of traders, and I talked to Ted Butler about this last week and will again this week, but they're piling in on the short side, and I think Ted said we're somewhere around 90-95% of our full-on short position, so that's sort of ominous on the gold market on a basis that we may have a corrective activity begin that would be quite substantial. Not that we can't go higher first, but what are your thoughts on that, Adrian?
I think we will get a commercial signal failure here. Of course, you have to have an identical situation of a very large short position on the part of the commercials, whether they're going to be successful and take the market down or whether they're going to fail. So the setups look identical. What makes me think that it will be different this time is that the sentiment is so bad. I've spoken to a lot of people in a similar situation to myself who run website investment services, and they're saying that they're seeing the worst interest in their services that they've ever seen in the last 11 years in the whole bull market in gold. And if you look at Hubert's index, I think it's running about 38% currently, there's just not a lot of interest in gold. I was at a gold brokers yesterday for about an hour, and there wasn't a single phone call, and silver went up 50 cents yesterday. So the very poor sentiment, coupled with this high net short position of the commercials, I think suggests that maybe the commercials won't be successful this time. Which ties into what I said a moment ago, is that I think there's a very strong demand for physical, which we're seeing in various different aspects of the market, which is why the commercials will fail. If it's just going to be a paper game, the commercials will always win. But what we're seeing with these various things happening in the physical market, coupled with poor sentiment, I think gives us a very good shot that the commercial will not hold gold at this level. And if it goes for 1,000, then I think there'll be real fireworks. We can move up very smartly to some prices like 1,300 or 1,500.
Usually we have the summer doldrums, Adrian, as you know, and we're getting to the end of the summer season. Physical buying will ramp up from India and Ramadan, and it's about to start in Muslim countries. That's when they traditionally come in and make their purchases. But is this going to be hindered to some degree by the fact that with the weak dollar and the higher gold price that they'll be a little stingy in terms of their buys over in the Middle East and some of those areas, do you think?
Well, those countries, obviously, when they're not importing, they're living on inventories to sell to their customers. And as they get into the typically high seasons of the wedding season in India and Ramadan and Eid in the Muslim countries, they're going to have to replenish stocks at some point. Typically, when they're not in the market, the cartel has a lot of success in bringing the price down. So when they re-enter the market, they are very happy to have much lower prices. This time, as we've just been discussing, they are not going to get a bargain. But I think at some point they're going to have to just bite the bullet. As their inventories are drawn down, they will have to replenish at whatever price prevalent in the market. So I think this is another sign that this could be a commercial signal failure, because those buyers will return to the market and they will be buying in volume.
Well, thank you so much for joining us, Adrian.
I appreciate it, Eric.
Thank you for joining us at KingWorldNews.com. Remember to tune in next week for another great show where we will have Dr. Mark Faber, author of the Gloom, Boom, Doom Report, as well as Bob Quartermain, Chairman and CEO of Silver Standard Resources. Also remember to go to our Gold Plus page for exclusive weekly interviews with Ted Butler and GATA.